We've been bearish on Bitcoin for the past few months. Last week or the week before, we had a retracement. If we take the fib of the last leg down from here to here, price basically retraced in the premium of that range. So we waited for a retracement in the premium of that range to start looking for short. We wouldn't like to short immediately, right? Especially right after a sweep of that low, which was also a monthly low, I believe. Yeah, of course you want to wait for some kind of retracement. Yeah, the premium of that range was also aligning with the range low of that range over here, right? In February, we had this multi-month range in Bitcoin, or maybe multi-week. Bitcoin has been ranging for some time over here, then it broke above, it had the retracement, deviation, and then we closed back inside that range. So I had here the main story behind that short was the fact that, of course, daily was still bearish. We had all these bearish inefficiencies, and also price retraced in the premium of that dealing range, and at the same time price retraced into the range lows. So if price was truly bearish, in my opinion, it shouldn't really trade deeper in that range and go, let's say, for tapping into that inefficiency, because at this point this would mean that price is kind of reclaiming that range over here. And as you probably know, when price reclaims a range and you get the proper confirmation, then the most likely scenario is that price is going towards the middle of the range at least, or even range highs. So when we escape from a range, I don't really want to see price breaking back inside the range and really accepting prices inside that range. So for me, I wanted to see price rejecting from range lows and from this area in general over here. We had this order block as well. So this was the high time frame point of interest. And then of course you have the high time frame being bearish, but also you have to wait for the hourly time frame, or in general your execution time frame, to also shift back to bearish, right? Because at this point the hourly was kind of bullish. So okay, you have the high time frame point of interest, which is this fair value gap in alignment with the range lows, but then you have to wait for a reversal. And yeah, for me here, the reversal was a closure below this H4 bullish fair value gap, right? We had this aggressive last leg up with displacement. So at this point, I wouldn't consider a closure, let's say, below this low as a valid structure shift in the way I trade, because price could sweep that low and then continue higher. In such a scenario, I prefer to see price invalidating the major bullish PDRAs, creating new bearish ones, and also respecting the newly created bearish ones. So in that case, I wanted to wait for a closure below this fair value gap. We got the closure over here. I went short. I had all time frames in alignment with my bias. I had the daily bearish, weekly bearish, H4 bearish, and at this point the hourly was also bearish. So I went short. Then we had a move down. We traded into this fair value gap and we found some support over there. So price started retracing also during the weekend. So at this point I am in slight profit. So you might think, okay, should I risk the profit that I've made already? Should I go break even? That's a question that you might ask often when you're in profit. I always try to be honest with myself and answer this simple question. If price trades back into my entry, will this invalidate my trade idea? In that case, that's not the case, right? Price could easily, during the weekend, retrace back to my entry and then go lower. So a retracement towards my entry wouldn't invalidate my idea, so I couldn't go break even. I couldn't put my stop loss to break even just to manage, just to avoid a loss, right? A potential loss. The trade idea was still there, so I had to keep my stop loss where it was. At the same time, if you have a look at this last leg down on the H4, we have a bunch of weak highs. So we had those relatively equal highs which formed and didn't sweep another high. Like for example, this high over here, it swept liquidity from that high. Those two guys didn't sweep any high, and if you have a look, they are also resting in the premium of that range. So at this point I thought, okay, it's weekend, I could expect some retracement during the weekend. Where do I want the retracement to stop? I think if price trades above those highs, it should reject from there. And that's also what I posted, I think, on my channel or discussed in my previous stream. When price was trading around those highs, I was looking at the reaction I was waiting to see, okay, will price SFP those highs? If, for example, price was trading above those highs and then started closing above this IFG, then I would probably close over here for a partial loss. But at this point, price trading in a premium of a dealing range is completely normal, is a retracement, and it doesn't invalidate my plan. So we had the sweep, we had another confirmation. At this point, I could have added to the position, but I didn't. I don't remember why. And then from that point, the delivery was pretty clean. Inefficiencies, retracement into the inefficiencies, sweep of some highs, move lower. We traded into the target. So that was the Bitcoin trade and the management of that trade.